it's interesting that, at a time when we are talking about from fragile 5 to top 5, that's India's positioning. High growth on target to become a $10 trillion economy soon, and the local GDP and the earnings cycle is in a multi-year boom. FI positioning, I guess, is reminiscent of what we saw in 2012 and 13, when India was different, world was different, tax collections were different, GDP growth was different, and the whole construct of India was strikingly different. So the positioning in terms of what we have by foreign institutional investors is at a 10-year, 11-year high. Now, Kunal, this is like saying that we are going back to the last decade,
correct,
which was a lost decade for India, which was a time when genuinely we were using words like policy paralysis.
Correct.
Genuinely you were using words like, oh, no DIs, only FIs.
Correct.
And if FIs would sneeze, markets would catch a flu.
Correct.
But FIs have taken an outright bearish view on India.
Correct.
Is this hedging or is this bearish view?
No, in fact, Nikunj, this is one of the biggest contra-indicators. So, there are indicators which we look out for trend, where there is a direction which you can gauge. But this is the biggest contra-indicator by the FIIs. Now, if you go back to the last observations and multiple observations, it's not just one in the last decade. There have been 3-4 big observations where the FII positioning in terms of the quantum on index futures has been massive. And on all of those occasions, so first of them, for example, is in March 2013, where the index formed, where the FII positioning at that point of time was one of the highest. So highest short positions were recorded at that time on the index futures. That led to a major bottom on the index, and something which we've not tested ever for the index. Same happened in 2020. Of course, we all know March 2020 what happened, but post that again a V-shaped rally, V-shaped recovery. Those bottoms of 7,500 were never tested again, at least in the last 4 years. And 2022-23, same examples. So that, and I've looked at the study for the chart, and even the mid extremes, not the major extremes, but even the mid extremes, even they hold a lot of significance. That we are not talking of a corrective wave, we are talking of a V-shaped recovery in a rally, which happens post this data point.
Kunal, if I just compare the last 10-year spike setup versus now, it could be in coincidence or maybe a genuine positioning, but that time also elections were around the corner, and now election result is less than 2 weeks away.
Correct.
So this typically happened when FIs were uncertain about the election outcome.
Correct.
And they decided to hedge their positions, and I think they're doing the same. Is
Correct.
it a safe analysis?
Yeah, it's a safe analysis. So it has to have an event which triggers it. Whether it's in 2013, 2020, 2022, when in the month of February there was this Russia-Ukraine crisis which just started off. 2023, and there were two positioning in 2023, March as well as October, and I think both of those occasions were when there was a lot of doubt across the US data points. So I think it's always led by some sort of an event or a data point, and it's good that this data point is actually occurring prior to the election data point, because this indicates that if the results are in favor, this could actually be a big turning point for the markets.
So if markets like the election result, that means we could be in for a massive and a monster short covering rally.
Exactly.
So the bears could be forced to run with tail between their legs.
Absolutely, Nikunj. That monster short squeeze is the biggest data point over here.
Okay. Now, interestingly, Kunal, the FI positioning is high in terms of short, but the market levels are reasonable. It is not that the index is at 12,000, 13,000 or 15,000, 16,000. So index is holding on and the FI positioning is short. That means domestic institutional investors this time have ensured that the free fall in the market despite FI selling is arrested.
Absolutely, yes, Nikunj. So one of them is the Nifty data point, where we look at the indices not correcting as much, but you look at the sentiments. So what we were in December 2023 as compared to what we are saying in the month of May 2024, we are not as high in terms of sentiments, because that time the easy money part was there. Right now in the last 2-3 months we've seen 3 big corrections, 1,000 point correction on the index, and that's why the sentiment is a lot more damaged and punctured this time around. But that's the biggest data point which indicates that if the FII short covering number is actually something to go by over the last decade and more, I think this could be a major sentiment as well as a market bottom for the index.
Aisha, we may call it a coincidence, we may just call it a pattern, but whatever it is, the positioning by foreign institutional investors in their portfolio is bearish, and it is reminiscent of what we saw in 2013, just before the election cycle. Now, the positioning of the market is such, Aisha, that while domestic institutional investors are arresting the fall, but if markets like the election verdict, then the words which we used with Kunal, we could be in for a bout of monster short covering rally looking at the positioning by foreign institutional investors in the Nifty.